Hi everybody, welcome to another video of what's moving the markets. Today we're going to talk about the recent rally in gold. So we'll be talking about precious metals and not just gold. And the reason is that I want to discuss with you why gold went up, right? Is it just because the dollar weakened, right? If that is the case, then why did the other commodities not go up, right? Why didn't base metals like copper go up? Why only precious metals like silver and gold went up? So is it more related to uncertainty, economic uncertainty, and also related to the dollar weakness? But is it more than just the dollar weakness, right? So that's what we're going to discuss today. Plus, of course, we're going to, as always, have a little bit discussion about US equities. Nothing new over here. The same thing that we have discussed many times before. We're just going to repeat that, just reconfirming our previous discussions. And again, we will talk a little bit about global dynamics as well and how it reconfirms our understanding of precious metals and US equities and global equities as well. So let's get started. So like I was telling you that gold prices went up a lot this week, right? And they haven't done that for quite a few days. So suddenly, very good week for gold. And yes, at the very obvious front, it looks like, oh, because the dollar weakened a little bit, that's why gold went up. Yes and no, because you have to look a little bit deeper than that, right? It's not just the dollar weakening that caused the gold to go up. Because if that was the case, then you should have seen copper go up as well, but it didn't, right? So copper was down because the overall economic data is down, and I'll come to that. But what I want to focus on is that it's not just gold that went up, silver went up, platinum went up. So it's actually the safe haven appeal that is there, right? That's just a trend in the background because there is uncertainty, there's global uncertainty, there's geopolitical issues, and because of that, there is tension. Central banks of China, Russia, they are continuously buying gold. Even countries like India, they are buying gold. The people of India, the people of America, even, I mean, you can buy gold in Costco now. So there is this underlying demand for gold and precious metals because of the uncertainty. But at the same time, what's countering it is a stronger dollar. So what happens is when the dollar gets strong, obviously gold from non-dollar buyers' perspective gets expensive, but then the weaker dollar obviously makes it cheaper. So as the dollar gets stronger and weaker, there is volatility in gold. But overall, because of that underlying safe haven appeal is there, whenever the dollar becomes weaker, it makes gold cheaper for the non-dollar buyers and they jump in and they start buying it. So what really happens is that the weaker dollar, so the whenever there is a slight retreat in the US dollar index, you see that, oh, gold is going up. But why does it go up a lot more than the amount that the dollar index is going down by? So if you just compare how much did the dollar index go down this week and how much did the gold rate go up this week, the gold rate went almost 1%, whereas the dollar index went down only 10 basis points, right? Why did gold go up 10 times more? It's because as soon as the dollar becomes a little bit weaker, gold becomes cheaper for the non-dollar buyers and they just jump in and they start buying because of the safe haven demand. And that includes central banks mostly. And that causes the gold price to go up, right? So this is the underlying trend, but it is limited to the upside. Why? Because the dollar is strong, right? The central bank, the Federal Reserve, has clearly said they're not going to cut interest rates a lot, which means the interest rate, the real rate that the US dollar is offering is high. And that will continue to create a strong demand, maintain a strong demand for the US dollar, which means the dollar will remain strong. So there is not much upside for gold, but even if it stays where it is, around between 2,600 and 2,700, right? Even if it stays at this level, it's very, very high compared to the cost of mining 1 troy ounce of gold, which is, let's say, somewhere around 1,700, depending on which miner we're talking about. But there is still a huge margin for gold mining companies to create positive cash flows for them, right? So with a higher gold price here to stay, what we could do is get very interesting exposure through gold mining stocks and maybe even trade on their equities, right? So this is a very interesting thing to possibly look at. Now, what reconfirms this analysis is that even your other precious metals like silver and platinum went up, right? If it was only the dollar weakness, then base metals such as copper should have gone up as well, right? But the underlying demand for copper is just not as strong as it is for precious metals like silver, platinum, and gold, because the factor is the uncertainty, the economic uncertainty which is there, and which is causing these central banks to do a partial de-dollarization and move to gold reserves, and the people in general of big populations like India and even the US to buy gold and hedge against inflation, that you see this demand for the safe haven demand is there, right? And whenever a little bit weakness in the dollar is there, immediately the precious metals, they shine. So you have to understand that there are multiple factors at play over here, right? There's not one driver, there are multiple drivers. Of course, the number one point is safe haven demand, right? And what are all the issues going on in terms of geopolitics? There's US China tensions, which everybody knows about, right? And Taiwan is one of the flashpoints of that. Then obviously recent developments in Syria and overall the Middle East in general. There is a lot of issue which is currently being shrugged under the carpet, but those problems are not going away. Those problems are there, they will continue to be there, which means these tensions will be there, and the safe haven demand is going to be an underlying strong trend. And yes, as long as the dollar is strong, you will not see much gold upside rallies, but whenever it gets a little bit weak, it creates opportunities for gold rallies. So what you have to understand, that gold is having a very strong support from the downside, right? It has held the key support of 2620, and it's probably going to continue to test 2700 and maybe even break that, cross that, and make that a support. So you're looking at possibly high gold prices, and therefore very, very good for gold mining companies, because obviously there's a huge margin for them in terms of the cost of mining 1 troy ounce and then obviously selling it at a nice fat margin, which creates profits and positive cash flows for them, right? And one of the biggest buyers is obviously your central banks, China, Russia, India. Almost all non-US big economies are slowly shifting their reserves from dollar to gold. So there's this partial de-dollarization going on, keeping the gold prices high. Whenever dollar becomes a little bit weak, gold shines. And that's what we saw this week. Right now, within the US market, because the Federal Reserve has made it very, very clear that the interest rates are higher for longer, so that is obviously bad for growth stocks. And we have discussed this many times before. I'm not going to get into the details again, that why a higher interest rate is bad for growth stocks, right? So what is good? Defensive sectors are good, like healthcare, utilities, etc. Plus, we've discussed many times that the energy sector has selected opportunities. Why? Because the Trump administration has a very, very clear priority for energy independence, which means they are going to focus on shale production and refining, so that they are completely independent of imported energy. Plus, they are going to, of course, not just focus on oil or fossil fuels, but also on clean sources like nuclear, and as well as renewable sources like solar and wind, right? So we will specifically talk about some companies shortly, and we have done that before, but we will do it again just to reiterate and reconfirm. But of course, it's not investment advice, just some ideas for you to consider. So again, Federal Reserve has made it very clear that interest rates are going to stay higher for longer, which limits the upside for gold as well as growth equities. But it's not that you want the gold price to go up. Even if it stays at a high rate, right, it's good for gold mining stocks. So what you could do is you could get into gold mining stocks, you could get into healthcare and utility stocks, right? You could get into selected energy stocks, and of course there are emerging market economies as well, which we have talked about earlier, such as Vietnam and India, that as the US and China get into more tussle and trade wars, the key beneficiaries are going to be Vietnam, because then the US will get its imports from Vietnam, they will get it from India, and we've talked about Mexico as well, which is also, of course, a major beneficiary in this US China tussle. Furthermore, because of your energy independence policy of the Trump administration, selected energy stocks like Chevron and ExxonMobil for fossil fuels, plus your First Solar and Tesla because of Tesla Energy for renewables, and like we have already discussed, gold mining stocks like Barrick Gold, or you could even consider Newmont, which is NEM, or you could consider an ETF like the Spider GLD, right? So these are all some interesting ideas for you to consider. If you want to get into industrial exposure within the US economy because of the higher spending, then you could look at FCX for copper exposure as well. Right. So as always, if you found it useful, please like, share, and subscribe. Leave your comments below. It's very, very encouraging to see your positive comments, and it's the fuel for me to continue to make these videos for you. So thank you for watching, and see you next week.